Ladies and gentlemen, welcome back to the channel. Here in today's video, we're going to be highlighting one quantum stock and one AI stock that could potentially change your life financially. Now, these are not recommendations. I'm not a financial advisor. I'm not a financial planner. I don't know your personal situation, but what I am highlighting here is the significant undervaluation of these stocks versus other competitors. Okay, now who's to say quantum and AI are both not overvalued or both not in a bubble? I don't think so, but that's where it's up to you to come to your own conclusions. But as far as quantum is concerned, this company is by far the best. As far as AI is concerned, in my opinion, this AI stock is by far the best bang for buck on a valuation basis, with price targets that are hundreds of percents higher than where the stock is currently trading. Ladies and gentlemen, the work is cut out for us in today's episode. If you like videos like this, hit the like button as well as subscribe to the channel. If you want to take it a step further, come invest and come trade with us in quantum, robotics, energy, AI software, biopharmas, gene editing companies. These sectors are in bull markets for the next 10 plus years. There's a lot of opportunities out there. We are identifying these opportunities in hot sectors for the next 10 plus years and making decisive investments in those kind of companies. That is how we are able to outperform all hedge funds and institutions year to date. I do not know of a fund that has a better performance than we do. Our portfolio is up over 145% year to date. At the peak on October 8th, before there was this carnage recently in markets, that portfolio peaked out at about 220% year over year. So come check it out if you guys would like to. But with that said, let's get into stock number one. Now, a lot of you guys are going to be familiar with this one. It's CCCX. It's actually a SPAC. Now, most of the time, 9.9 out of 10 times, I am not going to talk about a SPAC on this channel. They're risky. What if the vote fails? SPACs do not tend to have great performances, but this one could be different, okay? I say that because there's a lot of heavy hitters behind this one. Now, I'm still getting up to speed on my quantum knowledge, but from what we can tell, this business is in the lead as far as quantum is concerned, with, firms like Citron Research being a big adversary for this company recently. Okay. You can see on October 14th, Citron Research says, as the reposted story shows, CCCX is leading the quantum race. Real revenue, real tech, but the market hasn't caught up. Even if quantum settles in, parity with Rigetti still puts CCCX north of $60 per share. You can see the chart here, just based on a comparable to Rigetti. Citron says that Inflection, the company that's merging into CCCX, is a much better company. But even if the markets only give Inflection the same multiple as Rigetti, the stock is going to be trading substantially higher than where it currently is, right? And Rigetti's in the 50s last I checked, so that would even put the stock, again, well north of $60 per share, just on a one-to-one valuation. Now, some of the opportunity comes in here because, yes, the stock sold off alongside the broader markets. 3 really bad days in a row. It rebounded a little bit on Friday. The stock was up 7% in regular trading, up 3% in after hours. It did hit that high of $27.50 per share, currently trading at $21.10. If you know anything about SPACs, you know that SPACs are backed at $10 a share. So this merger is expected to complete within the next 3 months or so. And just based on Wall Street and how they're looking at this company, how people are advocating for this company, nobody's expecting the vote to fail. Like, why would the vote fail? That would make no sense. So I'm considering it like the vote will pass, but there's the risk that it doesn't. In that case, you're going to lose 50% of your money, a little bit more than that if you're buying the stock at today's levels, right? That's the risk. And that's what does keep SPACs with a certain lid on them, right? Once you get closer to completion of the merger, once the vote actually happens, you'll get the final move, like the confirmation move, if you will, once the vote does actually pass. But between now and then, you know, the higher the stock goes, the more confidence Wall Street is gaining that the merger will actually go through. And again, you have heavy hitters on this one, guys. Like, heavy hitters. I'm surprised the stock is trading as low or to such a severe difference in valuation compared to Rigetti. You even have Steve Grasso here, which, if you guys have watched CNBC, you've seen this guy. CEO of Grasso Global, Wall Street, NASDAQ pedigree, CNBC fast money regular, okay? You get the idea. That's what his profile says. Now, he says here, CCCX, let's start here. Quote, already generated actual revenue of approximately $29 million over the trailing 12 months as of June 30th, 2025. The company has $50 million in booked and awarded business contracts and a pipeline worth $300 million, indicating strong and expanding demand for its quantum computing and sensing products. Inflection, soon to be publicly trading under CCCX, has significant partnerships and trusted deployments with high-profile industry and government entities such as NVIDIA, the U.S. Department of Defense, NASA, and the UK government, which signals strong validation and large-scale commercial application. The business combination values Inflection at $1.8 billion pre-money, providing CCCX with more than $540 million in gross proceeds, including significant institutional investor backing through a private investment in public equity that brings financial stability and growth capital. Compared to other quantum competitors that rely mostly on research grants and burn capital, CCCX/Inflection shows real revenue from product sales and a diversified quantum monetization approach encompassing hardware, sensors, atomic clocks, and RF systems, positioning it as a quantum tech company with a tangible business rather than a speculative research entity. So, very, very strong endorsement here from Steve Grasso, and we've heard similar things. Again, Citron Research has a pretty good track record, at least in recent years, in predicting the next big stocks. One stock that I covered here a lot on the channel was Nebius, ticker symbol MBIS. I was making videos on that back in April. Okay, well, guess who was also on to Nebius around the same time? Citron Research. Now, the stock is at $113, $114 per share. It peaked out at about $141 per share. We were investing in this company in the $20 range. Okay? That's still like a 600+% return from here. At one point, it was what? Like a 15x? 15x? No, 8x? Something like that, okay? So, yeah, we have a pretty good track record at seeing these things. Now, I don't know if quantum is overvalued in general, but what I will say is if quantum continues to run, Inflection could have quite a parabolic move once it actually does merge and go public and start trading under Inflection. Like, Inflection is the highest quality quantum company out there, trading at a significant discount to basically all other quantum stocks. So I think there could be some real opportunities there. Now, in this portfolio, I've been invested for 13 days in the company with an average cost basis of $16.42 a share, currently up about 32.5%. But again, if these Wall Street guys are correct in their view on the company, if I'm correct on my assumption of the company, there is significant upside from here. So I currently own, again, 500 shares. Average cost basis $16.42 a share. Current market value almost $11,000. Okay, in this portfolio, I have 500 shares. Average cost $16.31. Market value almost $11,000. Same exact position. Currently up $2,662, or up 32.5%. Okay, this, for comparison, is about 6% of this portfolio, and it says 8.78% of this portfolio. Okay, So not super large positions, but it would definitely hurt if like the merger or something were to fail. Now, what I did recently, and I think it's too late for this at this point, was I did go out and I sold 5 of these CCCX $35 calls expiring November 21st, because I'm like, hey, okay, great. If the stock goes up 100% from here, roughly it would go up over 100% if it gets above $35 per share from my average cost basis. I would be forced to sell with over a 100% gain, would make over $20,000, okay? And I get to keep the premium, which these options I sold for $320 a piece, so I collected about $1,500 up front with, again, upside to $35 per share, including the premium. It's really $38 per share. So there was that just seemed like a good trade at the moment because the premiums were so high. You collect back like 20% of the total starting position size with over a 100% minimum guaranteed return. Now, I think it's too late for that following the last couple of days of decline. I actually think some call options might be interesting on the company at this point. But again, we'll see. If the stock gets up to $35, I'll be forced to sell in this portfolio. But I did not do that in this portfolio. So in this portfolio, I would still have the 500 shares. So kind of, like a dual trade strategy with this one. Now, the other company that could change your life, if I'm correct. Now, I'm not a financial advisor. I'm not a financial planner. Again, I could be wrong. Keep that in mind. Is a company that is featured on this channel a lot. The company is RZLV, okay? RZLV AI is by far the cheapest AI stock on the markets today. There is no other AI stock that is as cheap as RZLV on a price to sales basis, okay? The stock is at $4.90 per share as of Friday's close. It's trading at less than 3 times sales. The market cap is around 1.47 billion. The company is projecting 500 million in ARR to exit 2025, with most analyst estimates around 400 million in revenue for next year. But you're going to trade off that ARR number, so you're trading at about 2.8, 2.9 times next year's sales, which is nothing. If you look at BBAI, if you look at SoundHound, if you look at Nebius or any other AI stock, you're trading anywhere from 10 times sales on the low side to 40, 50 times sales on the higher end side. Okay, with some private AI companies trading at over 100 times sales. Okay, OpenAI, yes, has a lot more validation and more people are bullish on that company, but consider it's got a $500 billion valuation, right? And it's only going to do 12 billion in revenue. That's even trading at 41.5 times, okay, sales. If RZLV even traded at, half of that at 21 times sales times the current stock price, that would be a $102 stock. If it traded at parity with OpenAI's valuation, it would be a $204 stock. Give me a break, okay? Now, why is the company trading so low? I think largely it's because not a lot of people know of RZLV, okay? This company has partnerships with Microsoft, Google, and Tether. They are really a two-faceted business. On one part they are AI agentic commerce. They are trying to create or they are creating and selling these, AI chatbots that are specifically tailored for retail, where a lot of large language models, by the way, RZLV's large language model beat Claude and ChatGPT 4.0 in a white paper in the retail sector. But a lot of large language models, they go off of probabilities, right? So they're not designed for retail. Like, again, a cologne with like sandalwood or something, or lavender notes. Like a large language model might see lavender and start suggesting lavender colored clothes or lavender, plants or something, and you're looking for a lavender cologne. Okay, you get the idea. it's not great. That's what Resolve calls hallucination. So Resolve has their own large language model that is specifically tailored to retail. Well, they have their chatbots that are, giving people better information. They also have a partnership with Microsoft and Google. So if you're partnered with Resolve, and let's say somebody wants to find a, black shoe, right? If you're partnered with Resolve, maybe your black shoe, product from like H&M or whatever it is going to pop up on Google as one of the first kind of leads, right? So that's where some of the partnership comes in. AWS as well as Microsoft Cloud help to power Resolve's chatbots as well. And there's direct sales channels between Resolve and Google and Microsoft. Now, the company is also pursuing a pretty aggressive acquisition strategy. They believe to remain in the lead in AI, you have to organically sell customers, you have to have partnerships and sell to customers, and also acquire. Resolve says acquiring people or companies is the fastest way that they can actually upsell and get new companies to use their product. So that's what they have been doing. They recently raised about $200 million in a private placement where a lot of, there was a lot of demand for that. It was an oversubscribed placement. And so now they have well over $200 million in cash. Their recent acquisitions was for about $1 million in stock, so 1 million shares of stock, around $6 million US dollars, and they only paid $10 million in cash. So there was minimal dilution, but again, the company just raised money. They're on this acquisition strategy. So that, and mix the fact that a lot of Wall Street, a lot of retail does not even know this company exists, and boom, you have a severely undervalued stock. Okay? Severely undervalued stock. And I think it's really just a matter of time before something happens. Maybe Nvidia takes a stake, or someone with a lot of influence starts to talk about the company or invest in the company. I don't know exactly what the catalyst is going to be, but at this point, that's all you really need is one catalyst to send this stock flying, just because it is literally so cheap. Now, the company did report earnings on October 1st. They are a UK-based company, so they only have to technically report 2 times a year. Now, the average price target on Wall Street is $9 per share over the next 12 months. But some of the recent price targets we've started to get are much higher than that. Okay, on October 1st, there was a lot of price targets that were reiterated or initiated. So on October 1st, H.C. Wainwright maintained a strong buy at $10 a share. Cantor Fitzgerald maintained a $7 price target, which even at today's levels is significantly below where the stock is. The Maxine Group initiated a $15 price target on the company. Northland Capital Markets put a $7 price target on the company, and Roth Capital in the latest price target issued a strong buy with a $12.50 price target. You're talking 300-ish% upside for $12.50 and like 400% upside if Resolve got to $15 per share from current levels. Now, partly what has brought down the stock as well is just broader market conditions, okay? When you have high-flying AI names or even quantum names like we just talked about, CCCX, and the markets go through a bit of fear, those are the first stocks that get sold off. But with the quality names, like I believe these two companies are, the rebound is inevitable. Now, this company, Resolve, on a DCF fair value, that is stands for discounted cash flow model or free cash flow. Its fair value on the company is around $7.80 a share based on a DCF model. I don't know of any AI stock that trades based on a DCF model, okay? That to me just shows how crazy undervalued this company is. And I do think we are heading into a strong market over the next 3 months, and these could be some of the stocks that do very well in the coming months. So, yeah. And as far as my position, Resolve is my largest single stock position. I have 14,000 shares in this portfolio, invested for 121 days. Average cost base is $3.24. I'm interested in buying this in the fours. The lower it goes into the fours, the more I buy. Okay, the more deals there are, the heavier I buy. So 14,000 shares, unrealized return $23,199, up 51.1%. Current market value $68,601. In this portfolio in Robinhood, I have 14,000 shares. Average cost basis $2.96. Current market value $68,601, up 65.3%. Just because I haven't averaged in this portfolio in a little while, so the average is lower, so the total return is higher, but up $27,100. I do have these 15 Resolve options, 250 calls for February 20th, for currently going for $320 a piece. Total return $3,225, or up about 205%. So I do also have 1,000 shares in Webull, 1,300 shares in Thinkorswim that honestly I don't even look at. Like they don't get looked at all. Plus 14,000 shares, plus 14,000 shares, plus the 1,500 shares worth of options equivalent is 31,800 shares times $4.90, and boom, $155,820 in exposure in this one. So I'm really heavily exposed in this company just because it's so under the radar. It's such a hidden gem at this point, hence the valuation, that like even if AI went to shit, like the AI market for whatever reason, like could this fall? Would this fall? Of course, but the valuation is already just so dirt cheap that the risk reward looks really good for significant upside from here. Not 20%, but like 2,000% upside potential, right? Next year, that is. Like, you want to give this one a little bit of time because you never know when the catalyst is going to come that sends this stock up 100% in a week, right? But I do think you're really one catalyst away from this thing going absolutely crazy. So again, let me know your thoughts on both of these companies down below in the comment section. Which one do you like most? Do you own both of them? I would not be shocked. If you guys want to come join the trading community, check that link out down below in the description of today's episode. As well as that, if you guys want to sign up with Public, that is where I have this brokerage here. By far my favorite brokerage, like hands down. You can look at your dividends and income and projected dividends over the next 12 months. Very simplistic to use, gives you all of the due diligence you need on a stock on the brokerage itself. Great scanners, AI tools, all kinds of different things here. If you guys want to sign up, deposit $1,000, you will get $100 in free stock of your choice. And if you guys just want to sign up to support the channel, I also get $100 in free stock of my choice, which will likely be going straight into Resolve. So if you're Resolve shareholders specifically, yeah, you can buy another 20 shares or so of Resolve on Public's dollar. So take advantage of that while it lasts. But nonetheless, have a great weekend. Have a great rest of your day. I would say go Lions, but they don't play till Monday. So enjoy your day of football, and I will see you in the next one.